And welcome to another edition of Trigger Point Research Setups. And I want to remind you that last week we talked about F5 networks. And I said there was setting up to either see a really big bounce, or if it passes through the zone on the bottom side of that, it was going to be a real problem. And if you look at this, what happened is, just from the basic chart on a daily basis, that F5 did in fact break down, and you can see that really starting to base out right now in about the $68.50 range. But I just want to show you why it's so important to utilize these extremely important levels that we had. We looked at the level of about 75 and saw that there was this potential, if it could really get through the next level, that it would do well. But again, it didn't. It broke down, and here we have some problems. But what I want to talk about today was something interesting, a different kind of pattern. Proctor Gamble is what I really want to talk about. And if you look at this just from a chart aspect, there is a variety of exhaustion moves back in late April into May. We saw this move, which moved from about 80 to about 82 very quickly, and then drop right back down. We see also the same kind of situation here in the beginning of the year, where we went from about $70 to about 75 very quickly. But you'll notice now that the chart looks a little bit different. It has a different complexion to it. And really what you want to know is, where are those points that the breakdowns can occur? And if they do occur, where can I catch them? Or if it's going to level out and base out, do I look at right here very simply by drawing a straight line that 76 is a decent area of support? You can see that over in May and over in June, all this was going well. But what I thought we would do is bring in some of our basic tools that we use here. And you can see that this highlights the overall levels much better. In fact, you can see these zones that are created. And we use this very simply with color coordination so that we have a much better understanding. Say that below the green is an area that is considered an area that we really don't want to be long. Above the green, we do want to be long. Above the red, we don't want to be short. Now, when we look at this, we see that there's some nice spacing out in the $76 range, and that was from the discussion a moment ago. We see on a daily basis it's the same thing, really. But we can see that there's additional volume, and we can see that there's additional opportunity to really have a decent amount of support in that area. So we'll kind of mark this right here, as the area that we could see some support. We marked it over here. We saw some support. It's about 76. So that's good support area. But the question really is, if we look at this, how do we then see if there's going to be any area to break down? So we'll go backwards for a second, and we'll look at the weekly. We'll see what's happening there. Now, the weekly shows a much different look if you see this. The weekly now shows that there is very little support under this 76. So when you take a look at the zones where you see that there is no particular availability of action, and that comes from either a gap up or it comes from a slow creep move down with very little volume, very little conviction, you can see that if it does in fact break down, that the opportunity for it to move lower is very significant. More importantly, when we put the X-ray on there and we look at the kind of through a, I guess you could say a night vision look. If you could say, okay, well, what's happening here? And we want to look at the overall the status of this. Well, what happens here is that we're saying, okay, well, let's look. Well, now we know not only do we see that there is no support at the $76 level, but potentially all the way down to about $70 is really nothing. Just look at this area from here, again, about 76 down to about 70. It's about a 9% drop. Now, you can see one thing. I'm going to kind of zoom in a little bit on this. Now, you can see one of the things that I'd like to look at is here. See, look at these long legs. See these long legs? And then you get the support, and it pops back. Whereas, there, over here back in July, the legs weren't, it was a nice movement on the upside. But now we're getting these jagged, big, gigantic breakups, breakdowns. There's no definable curve to this, and because we are seeing that our particular night vision or X-ray shows us that right inside of the area of 70 through 76, and then above 78 through about 82, that there's really no participation by the market. So when we look at this again, and let's switch back to over the daily, because that's really what we want to look at from the aspect of finding out where the opportunities may lie for us here. And I'm going to zoom out here for a second. Now, what you see again is when we combine both of these together, a very clear view. We would look to see this as a short opportunity under 76, and give ourselves a little bit of room here. Right about, I guess about the 76 to about 75.60. That's where we're looking for this to break down. If it does, we think this would be a nice short to pick up. And if you want to take a look at what we do at Trigger Point Research, of course, you can take a look at it for a 14-day free trial. Check out Trigger Point Research and all the things that we have to offer, because we do send email alerts and everything right up to your text message if you want, when these things do in fact break down. These are just ideas, but what if you could actually utilize them in your daily portfolio and investment management? Great stuff. We'll see you next week.